Very good morning, my dear friends. We are in the chapter Internal Reconstruction. A quick recap what we discussed in yesterday's class. So if the existing company is suffering from continuous losses, then the existing financials may not depicting the true and fair view. So that's why we can go for either internal reconstruction or external reconstruction. The main difference in between two methods is, in case of external reconstruction, liquidation of existing company is going to occur. But in case of internal reconstruction, without liquidation of the existing company internally change the entire affairs to show true and fair view. So what exactly happening in case of internal reconstruction? There is revaluation of assets and reassessment of liabilities, variation in shareholders' rights, and reduction of capital, or the compounding or negotiations with various creditors is going to occur. Am I right? So practically speaking, first, the entire internal reconstruction scheme is designed by the management after making sufficient number of meetings with various parties. Then it will put an application to the NCLT. NCLT, after watching entire provisions of the scheme, if it is in the equitable basis, by considering interest of all the persons, then it can approve. So once the court approved the scheme of internal reconstruction, then a company will start implementing such internal reconstruction activities in generally into the company. So once the company completed the internal reconstruction process, then at the time of preparation of financials, it should add the word "and reduced." So as per the Companies Act 2013, in the following measures, the internal reconstruction process is going to occur. That is alteration of share capital, section 61, variation of shareholders' rights, section 48, reduction of share capital, section 66, compromise or arrangement, section 232, and finally surrender of shares. We not yet discussed anything related to the surrender of shares, but we already seen what exactly happening in case of alteration and all other issues. That is, in case of alteration of share capital, there may be a subdivision and consolidation of shares going to occur, or maybe conversion of shares into stock is also going to occur. In case of alteration of share capital, there is no capital reduction or reconstruction account is not takes place. The reason is, here shareholders are not sacrificing anything in the form of paid up capital. So just either subdivision or consolidation may only going to occur, or just conversion of share into stock or stock into shares will occur. Then what is the accounting entries you need to adopt at the time of alteration of share capital? So simply you need to cancel the old number of shares with the old face value. Then you need to credit the new number of shares with the new face value. There is no change in the total paid up capital. But we already discussed the difference between shares and stock as well. Sir, shares having a particular denomination, stock doesn't have any denomination. A fully paid up equity share can only be converted into a stock. But if a company can issue stocks in the primary market, no, it cannot issue any stock in the primary market, because after issue of shares only there is a possibility of conversion of stock will exist. Am I right? Such points also we deal. The journal entry is equity share capital to equity stock, or equity stock accounted up to equity share capital, as the case may be. Then we discussed things related to variation in shareholders' rights. The variation may be with respect to voting right or with respect to dividend right. Maybe in case of preference shares, cumulative to non-cumulative, participative to non-participative, maybe certain percentage of preference shares to another percentage of preference shares. So all things are going to occur. In the same way, in case of equity shares, two different classes may be possible as per the Companies Act 2013. If at all the equity shares one class is going to convert to another class of equity shareholders, then which is also known as variation in shareholders right. So the classes may be vary depending upon their dividend right or depending upon the voting right. Okay, here also capital reduction account or reconstruction account is not coming to take place. So because in variation in shareholders' rights, there is a sacrifice made by the shareholders with respect to either voting right or dividend right, but they will not make any sacrifice with respect to their paid up capital. So that's why capital reduction account or reconstruction account will not occur. Next, we've seen the reduction of share capital. Reduction of share capital is going to happening in three ways. That is through conversion of partly paid up shares into fully paid up equity shares through extinguishment of the unpaid capital. So at this point of time, simply there is no change in the paid up capital, but simply you are converting the existing face value of the share into fully paid up shares. I mean to say, I gave an example. The face value is 10 rupees, paid up value is 8 rupees. Number of equity shares are 1 lakh, right? At that point of time, in general, the face value is 10 rupees. Now the face value of the equity share is going to convert into 8 rupees. If you observe, the journal entry is equity share capital account are 8 lakhs to equity share capital account 8 lakhs only. There is no change in the paid up capital. Earlier paid up capital 8 rupees, right now also paid up capital 8 rupees. Then what is the difference, sir? Earlier face value 10 rupees, right now face value 8 rupees. Earlier face value 10, paid up value 8. Now face value and paid up value both are 8 rupees only. Sir, then very literally there is a reduction in capital, reduction in paid up capital. There is no reduction in paid up capital, na? No, there is no reduction in paid up capital at present maybe, but in future, company lose the right to make a call from equity shareholder. That's why in future there is going to occur reduction in the paid up capital. Otherwise, the paid up capital would increase in the future. That right actually foregone by the company. That's why we can call it as a reduction paid up capital only. By the payment of part of the paid up capital. So through payment of cash only, the existing paid up capital of the company is coming to decrease. That is, the journal entry, equity share capital accounted are to equity shareholders account, equity shareholders accounted are to bank account. That is the normal journal entry only. Then sacrifice made by the shareholders. Maybe there is reduction in paid up value, but not in face value, or reduction in paid up value as well as face value. I already discussed, sir, if nothing is given, then we can presume that reduction in both face value as well as paid up value in both the things are occurred. Sir, if there is only reduction in paid up value but not in face value, the entry is equity share capital accounted are to reconstruction account. No need to disturb the face value of the equity share here. So reduction in paid up value and face value means first you should need to cancel the entire face value. That is equity share capital account are entire face value gone. To new face value you should need to be created. The remaining balance you can make it transfer to reconstruction account. If you observe all the problems or the problem which I already discussed, problem number 3, we actually done based on the second one only. I mean to say we presumed that there is a reduction in both paid up value as well as face value. Okay. Then we've seen the meaning of compromise or arrangement. Compromise or arrangement is an agreement entered between two parties. One party is company, another party may be shareholder or the debenture holder or creditor or maybe any outside party. For which purpose they enter into the agreement, sir? For the purpose of sacrifice or the foregone made by the other party. What is the difference between compromise and arrangement? I already told you, in case of compromise, first there is a conflict of interest occurred in between the two parties. After occurring of so many negotiations, those such two parties are entered into an agreement, which is nothing but compromise. In case of arrangement, there is no conflict of interest. Both the parties are agreed. Both the parties have identity of minds initially itself. So they are readily sacrificed by the shareholders, and such sacrifice is simply accepted by the company in case of arrangements. Sir, we've seen multiple situations in case of compromise or arrangement. So one of the example I given that, sir, out of the existing creditors, some portion is foregone, and for the remaining portion, we are paying cash, maybe we are paying equity shares, maybe we are issuing preference shares, whatever the case may be. Then the portion which is foregone by such creditors, you can make it transfer to reconstruction account. And for the portion which you are discharging the amount, you can just issue either equity shares or preference share capital, or maybe you can credit with the debentures as well. That is the entries creditors accounted are to reconstruction, to equity share capital or cash or preference share capital, whatever the case may be. One more situation I deal, sir, the existing liability holder is foregone certain percentage, but as a result of foregonement, they are going to expect something in consideration of foregonement or in consideration of sacrifice made by them. They are expecting some other things. That means the sacrifice is not the real sacrifice. You need to calculate the real sacrifice at that point of time. Now, if you see in example number 2, the existing creditors for 5 lakhs, out of such 5 lakhs, they're ready to foregone 40%. That is 5 lakhs into 40%, 2 lakhs. Is it 2 lakhs is real sacrifice? No. Such 2 lakhs is a gross sacrifice. Because as a result of foregonement, they're expecting 1 lakh worth of equity shares. That means out of the 2 lakhs, they are expecting 1 lakh means remaining 1 lakh is only the real sacrifice here. Now, what is the journal entry? You should cancel creditors only to the extent of 2 lakhs. That is creditors account that are 2 lakhs. Out of that real sacrifice, you can make it transfer to reconstruction account 1 lakh. The remaining portion you can just issue to the equity shares to equity share capital 1 lakh. Sir, what about remaining 60% of the creditors, sir? If nothing was given, we can simply assume that remaining 60% of the creditors are still continue as a creditors in my books of accounts. Hope you understand the difference between the first situation and the difference between first and second situation. Sir, in case of first situation, we are issuing equity shares for the remaining portion of creditors. But in case of second situation, we are issuing equity shares as a result of foregone by the creditors. So you should understand the difference. In generally, we are issuing the equity or preference or debentures for the remaining portion, or in consideration of foregone we are issuing. You need to check at the time of reading the question. Okay, fine. Sir, next, in case of internal reconstruction, revaluation of assets and liabilities are also going to occur. It is upward revaluation of asset, which is a profit. You can make it transfer to reconstruction account credit. If it is downward revaluation of asset, then which is loss, then reconstruction account need to be debit. In case of liability, if it is downward revaluation, then profit will be erased. Then reconstruction account need to be created. Sir, if it is upward revaluation in case of liability, then which is a reconstruction account loss. So that's why you need to debit reconstruction account at R2 liability account. So one more important issue I discussed, things related to unrecorded assets as well as liabilities. Sir, unrecorded liability. So number of times it will come into the exam, it will come into the problems. That is arrears of cumulative preference dividend. We can call it as unrecorded liability only. If such arrears of unrecorded liability, such arrears of cumulative preference dividend is foregone by the preference shareholders, then there is no entry. But we are discharging amount to such unrecorded liability holders or arrears of cumulative preference dividend, then the journal entry is reconstruction account at R2 bank, or reconstruction account at R2 equity share capital, or reconstruction account at R2 preference share capital at the rate of discharging amount. Whatever the amount is the book value, which is irrelevant. We already seen the conclusions part. That's why I only telling the conclusive journal entries. Next, coming to unrecorded asset, if it is realized in the outside market, the journal entry is bank account at R2 realization account at the rate of realized value. Or if you are getting equity shares of the other company to the reconstruction account. What are the thing you are getting? That account at R2 reconstruction account at the rate of realizable value. Sir, after completion of all the journal entries in reconstruction account, what I should need to do? Check balance in reconstruction account or capital reduction account. That balance you can useful to cancel the profit and loss account, debit balance. Whether it is clearly mentioned in the problem to nullify the balance of profit and loss account or not. We should need to nullify the P&L account debit balance with we should need to nullify the reconstruction account balance with profit and loss account debit balance, because that is the primary objective of conducting the entire internal reconstruction procedure. So then, but coming to intangible asset, if it is specifically given in the problem that intangible assets are worthless, you can make it set off with reconstruction account, or maybe to the extent of this portion of intangible assets only you can nullify with the reconstruction account. If such information is provided, then only you can nullify. Otherwise, you are not eligible to knock off the intangible assets with reconstruction account. Please bear such point also in your mind. Am I right? Sir, after nullifying the profit and loss account debit balance, still if there is any balance in the reconstruction account, it should be need to transfer to capital reserve. So the balance in the reconstruction account is not sufficient to knock off the profit and loss account debit balance. You can use other reserves at that point of time. So I told you both the situations. Am I right? Next. Now we are in the problem number 3. Are you with me, guys? All of you? Let me check. In the query box, can I start? Problem number 3. Are you with me? Quickly, please, all of you respond. Just a second. I'm opening the query box. Let me check. Before proceeding further. Just give a moment, guys. Yeah, fine. Right. Concentrate, guys, all of you. So now to continue my flow, just I want to read the crux of the problem number 3. We already done with journal entries, but anyway, To continue the balance sheet, let me read quickly the contents of the problem number 3. So if you observe the balance sheet of A & Co, which is given as on 31st December 2011, freehold property 4,25,000, plant given, patent and goodwill is there, trade investments are given, under current assets trade receivables are there. Further information, inventory, profit and loss account, debit balance of 5,35,000, which is the total of assets. Liabilities, cumulative preference shares are there, face value 100 rupees, under coming to equity shares, face value 10 rupees. 6% debentures secured on freehold property, accrued interest is there, under current liabilities, bank OD, trade payable, director's loan is given. Court approved a scheme of reorganization to take effect on 1/1/2012, whereby we already seen the problem. That's why I'm increasing the reading speed. The preference shares to be written down to rupees 75 each, and equity shares are written down to 2 rupees each. The difference amount we already make it transfer to reconstruction account. Now, after completion of internal reconstruction, the existing preference shares are at the rate of 75 and the existing equity share is at the rate of face value of 2 rupees each. Here only we presumed that there is reduction in both face value as well as paid up value. Now the face value per share is 75 in case of preference share, as well as paid up value is also 75. Coming to equity share, the face value just we presume that which is 2 rupees and the paid up value is also 2 rupees. If nothing is mentioned, whenever there is a reduction in share capital, we can simply assume that there is a reduction both in paid up value as well as face value. Okay. Of the preference share dividends which are in arrears for 4 years, 3/4 to be waived and equity share of 2 rupees each to be allotted for the remaining quarter. Sir, we've seen the total dividend on preference shares is 24,000 into 4 years. But out of which 3/4 is waived means for 3/4 no need to pass any journal entry because the unrecorded liability is foregone by the other party, then there is no journal entry. What about remaining 1/4, guys, which is nothing but 24,000, for which we passed the journal entry. So we issued 2 rupees each to allotted for the remaining quarter, that is reconstruction account data to equity share capital account 24,000 we made. Accrued interest on debentures to be paid in cash, a simple journal entry I passed. Next, if I made a discussion things related to freehold property, if you observe here, debenture holders agree to take over the freehold property, book value of 1 lakh at a valuation of 1,20,000. That is 1 lakh freehold property first upward revalued 1,20,000. From this we got the revaluation profit of 20,000. Am I right? Plus, apart from this upward revaluation, if you check here in another point, that is in point number 8, remaining freehold property to be revalued at 3,87,500. So remaining freehold property means the total amount of the freehold property is 4,25,000. Out of 4,25,000, we already discussed things related to 1 lakh. Remaining is 3,75,000. Now such 3,75,000 is upward revalued at 3,25,000. It's 4,25,000 now. So the 3,25,000 is upward revalued at 3,87,500. So due to which again we get how much revaluation profit, guys? So we get 62,500 revaluation profit from this. So the total revaluation profit is 82,500. Now the simple journal entry is you should need to increase the freehold property account to reconstruction account 82,500. After passing such journal entry, now the freehold property is shown in your books of account. Some portion is 1,20,000 and the other portion is at 3,87,500. Now you can shift the freehold property to the debenture holders. Now the journal entry is how much percentage debentures, guys? 6% debentures. 6% debentures accounted are to debenture holders account. That is 1,20,000. Debenture holders accounted are to freehold property account 1,20,000. Apart from this, debenture holders subscribed additional number of debentures. That is 8% per annum. They will get the interest. That is, we are getting a bank balance of 1,30,000 to additional issue of debentures to augment the working capital, maybe to get the cash into the business. That is bank account data to 8% debentures account 1,30,000. Patents and goodwill to be written off. So at the end, we will pass journal entry reconstruction account data to patent to goodwill. Inventory to be written off by 65,000. Reconstruction account data to inventory. Amount of 68,500 to be provided for bad debts. Reconstruction account data to debtors account. Am I right? Such all things we already done. So point number 8 already clear. Trade investment we sold for 1,40,000, sir, which is the book value having 55,000. So the difference is nothing but profit only. I think so. Difference is how much, guys? The difference is 85,000, right? So the entries bank account at are 1,40,000, to investment 55,000, to reconstruction account at are 80. How much is the difference, guys? 1,40,000 minus 55,000. Yeah, which is 85,000. Okay. Directors to accept settlement of their loans as to 90%, thereby allotment of equity shares of rupees 2 each as to 5% in cash, and the balance of 5% is being waived. Total directors loan is 1 lakh, out of which 90% is settled in the form of equity shares, that is 90,000. Remaining 5% is settled in the form of cash, and the remaining being waived. What is the journal entry? Directors loan account at 1 lakh, to equity share capital account 90,000, to cash 5,000. And for this being waived off means you can simply make a transfer to reconstruction account. Am I right? Next, there were capital commitments totaling 2,50,000. These contracts are to be cancelled on payment of 5% of the contract price as a penalty. We already seen that this excess of 12,500 is paid during the process of internal reconstruction, because if you cancel such capital commitments, you need to incur such expenditure. Now, what is the journal entry? Reconstruction account at R2, cash account. The original entry is expense to cash. Expenditure should be need to charge you to the reconstruction account. Then the net entry is reconstruction account at R2, cash account only. Ignore taxation and cost of the scheme. You are required to show the journal entries reflecting the above transactions. In the last class, we already seen all the journal entries. Then after completion of the journal entries, we check the balance in reconstruction account as well. Now, the balance in reconstruction account, we got 5,35,000, and the profit and loss account debit balance also is given in the balance sheet at 5,35,000, which both are nullified with each other. That's why there is no balance in reconstruction account after making a set off with the profit and loss account. That's why no need to transfer any amount to capital reserve. With this background, first let me complete the balance sheet, guys. All of you, please concentrate here how to draft the balance sheet. The magic of drawing the balance sheet in case of internal reconstruction, just now we are seeing. But here, the major concern is you need to check each and every issue, because a lot of journal entries you already passed. Am I right? So how each and every component of the balance sheet item impacted due to the process of internal reconstruction, you need to check. Now, the balance sheet of the company name is A & Co Limited. Balance sheet of A & Co Limited after reconstruction. He is asking after reconstruction, right? So don't forget to write and reduced in bracket. What we should need to write, guys? And reduced at the time of preparation of balance sheet. So now the format of the balance sheet is serial number, particulars, note number, amount rupees. Okay. Now let us start with equity and liabilities, guys. Number 1, equity and liabilities. So under equity and liabilities, A, there is one shareholders fund, then A is share capital. So we can go to note number 1. All of you come below to note number 1, share capital. First, let us check, guys. Is there any information given in the problem related to authorized share capital? Is there any information is given related to authorized share capital? So there is no information related to authorized share capital, right? Let me check clearly the balance sheet. Yes, there is no information. They are directly given the paid up value only. So that's why you no need to represent the authorized capital. Now coming here, first let us start with equity share capital. Equity share capital. Now, if you observe in the point number 1, it is clearly given that all the existing equity shares are reduced to 2 rupees each. Now, all of you can concentrate on the journal entries. In whatever the entry, equity share capital is involved, you can consider such journal entry. If equity share capital is credited, which is increase. If equity share capital is debited, which is decrease. First entry, no impact. Come here, second entry, equity share capital, credit is there for 1,50,000. All of you start with your calculator, 1,50,000 plus. In third one, equity share capital credit is there plus 24,000. Fourth one, nothing. Fifth one is also not relevant. Sixth one, not relevant. Seventh one, not relevant. Eighth one is also not involving any equity share capital. Ninth one, nothing. 10th one, come to the 10th one, guys. Again, equity share capital is there plus 90,000. Okay. That's it, guys. Sir, how much worth of equity shares you got? 2,64,000. For me, the value is 2,64,000, guys. So now you can simply put here, each equity share is 2 rupees, guys. Now with you 2,64,000 worth is there means how many number of equity shares? 1,32,000. 1,32,000 equity shares at the rate of 2 rupees each. Then which is 2,64,000. Am I right, guys? All of you? Next, after equity share capital, you should need to start with preference share capital. Now, again, you can start with the journal entries. Here, the 6% cumulative preference share capital is there with 3 lakhs. In any other entries, preference share capital is there. Preference share capital, preference share capital, preference share capital. So nowhere it is there. Only in first entry itself, which is 6% cumulative preference share capital. Okay. That is 3 lakhs means 3 lakhs divided by 75. How many number of preference shares are there? 4,000. 4,000. 6% cumulative preference shares at the rate of 75 rupees each, which is 3 lakhs. So total 5,64,000. So you can go to note number 1 and fill here, which is 5,64,000. Next, guys, B, reserves and surplus. Reserves and surplus. So one thing you need to observe here, sir, profit and loss account debit balance we have in the balance sheet, which is nullified through balance in the reconstruction account. That's why there is no profit and loss account debit balance need to represent under the balance sheet after completion of reconstruction. And one more thing, is there any balance occurred under the reconstruction account after making set off with P&L? If any balance is there, maybe we would transfer to capital reserve. But here there is no balance. That's why there is no necessity to recognize any amount under the reserves and surplus. So which is nil here. So any securities premium, nothing is there, right? Anyway. So nowhere securities premium and such all other reserves and surplus exist. Okay. Next, come to the next issue, non-current liabilities. You know, number 2. Let's start here just. Number 2, non-current. Under liabilities, we have 6% debentures of rupees 3,75,000. Out of this 3,75,000, we paid 1,20,000 by giving the freehold property. That means out of this 3,75,000, 1,20,000 gone. How much we have? 3,75,000 minus 1,20,000, which is 2,55,000. First, you need to write under notes to account that point. That is note number 2, long-term borrowings. Under long-term borrowings, which is 6% debentures. So opening balance is how much? 3,75,000 less paid in the form of freehold property, which is 1,20,000. Still we have a balance of 2,55,000. Still we have a balance of 2,55,000. Apart from that, you issued new debentures as well. New 8% debentures you issued, guys. Bank account data to 8% debentures. Now such 8% debentures also you need to represent here. So like this, each and every point you need to think you need to fit here, which is 1,30,000. What is the total amount of the debentures? Which is 3,85,000. You can go to Main balance sheet, put note number 2, 3,85,000. So that's it. With this, long-term borrowings is over. Next, come to the question. Sir, accrued interest we already paid. Am I right? Then only current liabilities are exist. So come to number 3, current liabilities. So out of current liabilities, the first component is bank overdraft, guys. Don't put bank overdraft right now because earlier maybe there is no cash balance. That's why we are taken for the OD. So maybe if positive cash balance is there, then we may repay the bank OD. We will show the only positive cash balance. After making repayment of the OD, how much cash balance is there, we will show under the positive cash balance. So if still we have a negative balance, I will write bank overdraft at later point of time. Otherwise, if I have the positive cash balance, after making the payment to the bank overdraft, I will put the amount under cash and cash equivalents. That's why for the time being, you can ignore the bank overdraft. I will check this point at the time of fulfilling the cash and cash equivalents. Next, coming here, which is trade payables. Sir, anything is there related to trade payables? Nothing is there. You can directly enter trade payables. Yeah, trade payables. How much? 3 lakhs. No need to think about director's loan. We already repaid. That is 5,000 foregone, 5% is through cash, 90% is through issue of equity shares. Okay. Next. This is the total of liabilities. You can start with assets, guys. You can start with assets. So we can start with assets. All of you under assets, we may put non-current assets. Non-current assets. Tell me, under non-current assets, A, property, plant and equipment. Concentrate. So from here, I need to start property, plant and equipment. PPE. So if you observe in the problem, freehold property is there, which is at 4,25,000. But we clearly given the working note out of the freehold property. Now you made the upward revaluation. Am I right? 82,500. After that, freehold property for the worth of 1,20,000 is given to the debenture holders. Now, how much you have, opening 4,25,000. Just I am writing opening 4,25,000. After that, you made the upward revaluation of 82,500. After that, you given 1,20,000 worth of the freehold property. Then how much is there with you? 3,87,500, which is nothing but this one, 3,87,500. So you can represent the same here, which is 3,87,500. Just in bracket, I'm writing 3,87,500 is the freehold property is with you. Next, plant is there. Sir, plant, any upward or downward revaluation? Please allow me check. Sir, plant, there is no upward or downward revaluation. That's why you can directly represent plant at 50,000. What is the total amount of PPE, guys? 3,87,500 plus 50,000. So I got 4,37,500. Sir, no need to put any amount under intangible asset. The reason is our entire intangible assets are transferred to reconstruction account. So if you check, patents and goodwill are write off with reconstruction account. That's why no need to record any intangible asset amount. Am I right? Next, patent over, goodwill over. Coming to trade investment, we sold it. We already sold it. There is no place in the balance sheet for trade investment. Next, you can start with current assets, guys. You can simply start with current assets. Okay, in current assets, trade receivable is there. A trade receivable. The trade receivable, now if you check, there is a provision for trade receivable exist here. It is clearly given that 68,500 is to be provided for bad debts. You need to decrease to that extent. That is 4,85,000 minus 68,500. How much you got? 4,16,500. Like this, you need to check each and every item, guys. Apart from that, what are all other current assets exist? Inventory is there. Yes, inventory also, I think so. Adjustment is there. Now it is clearly given that inventory is to be written off by 65,000. Sir, in books, how much it is? 4,25,000, right? So out of such 4,25,000, how much is written off? Written off amount is 65,000. So 4,25,000 minus 65,000, which is equal to 3 lakh. 60,000. Okay, next. Now you can all of you cross check the cash and cash equivalents balance, guys. Cash and cash equivalents balance. Let us cross check here. Now, all of you, let me start with negative figure of the bank OD. Let me start with negative figure of the bank OD. Under liabilities, bank overdraft is there now, which is 1,95,000. All of you in your calculator, you can start with minus 1,95,000. Now, in whichever entry you will get cash is a positive, you will add it. Cash is a negative, you will reduce it. First entry, no impact. Second entry, no impact. Third entry, no impact. Fourth entry, minus 22,500. The fifth point, there is no impact. Sixth, no impact. Seventh, no impact. Eighth, also no impact. Ninth, plus 1,40,000. 10th, minus 5,000. 11th, minus 12,500. So I got minus 95,000. Is it considered all items, guys? Somewhere something is missed out. Please let me know. Yeah, this one I missed out. Issue of debentures plus 1,30,000. 35,000 is the positive cash balance I got. Do you all of you getting positive 35,000 cash, guys? So issue of debentures I missed out. So I added it. I got 35,000 positive cash balance. Sir, if it is 35,000 positive cash balance means I should put here cash and cash equivalents. So which is 35,000. You can make it total of the liabilities here. You can make it total of the assets here. So liabilities, sorry, here. So if you check the total of the liabilities, which is 5,64,000 plus 3,85,000 plus 3 lakhs. Total I got 12,49,000. Next, come here. 4,37,500 plus 4,16,500 plus 3,60,000 plus 35,000. I got 12,49,000. Maybe, sir, here some persons what they will do, provision for bad debts is there, na? On behalf of reduction from trade receivables, they would show under short-term provisions as well. That is also correct presentation only, but as a practice, as a traditional practice, just we are reducing the provision for bad debts from trade receivables. But if you want, if you can make it shown 68,500 under short-term provisions, nothing is wrong in that. Like that also we can do. But as a traditional practice, just I am making in this way. Now, can you please confirm all of you guys? Is it understand each and everything in case of problem number 1? Am I right? Okay. Shall we move on to the other problem? So the entire session is completely dedicated to problems, guys. Except the share surrender concept, we will dedicate the entire time for doing the problems. Now let me take up problem number 4 into the discussion. Shall we start? Just a minute, friends. Okay. Given below is the summarized balance sheet of Rebuilt Limited as on 31st March 2011. So liabilities, assets. First, let me read the assets portion. Building at costless depreciation, plant at costless depreciation, trademarks and goodwill at cost, inventory given, trade receivable given, profit and loss account is the debit balance, guys. Here 4,51,000 is there. If you observe under liabilities, authorized share capital is separately given, which is at 6 lakhs. 12,000, 7% preference shares of rupees 50 each. Face value is 50. Note, preference dividend is in arrears for 5 years. So preference dividend is in arrears. Unrecorded liability is there. 15,000 equity shares of rupees 50 each, which is 7,50,000. Loan amount is given, trade payables given, other liabilities also given. The company is now earning profits short of working capital. Maybe the company now started earning profits. Already huge debit balance is there, but right now which is into the profit situation. Now the turnaround strategy they applied, maybe the loss making company converted into a profit making company, but still short of working capital. There is no money in their hands. That's why a scheme of reconstruction has been approved by the NCLT. That is approved by both the class of shareholders. So after approval of shareholders, it should be approved by the court, no doubt about it. A summary of the scheme is as follows. The equity shareholders have agreed that their 50 rupees share should be reduced to 2.50 each, 47.50 per share. They are ready to forgone. Okay, it is clearly given. They have also agreed to subscribe for 3 new equity share of 2.50 each for each equity share held. They are ready to sacrifice 47.50 per share, and they're also subscribing the additional shares. Right now, how many number of shares are there? 12,000. Is it 12,000, right? Sorry. It is 15,000 related to equity shares. 15,000 equity shares are there. Now, they are ready to subscribe 3 new equity shares for each and every equity share they held. So 15,000 into 3, 45,000 shares into 2.5, which is the new issued equity share capital. Next, coming to point number B, the preference shareholders have agreed to cancel the arrears of dividend. So entire arrears of dividend is foregone. Sir, if an unrecorded liability is foregone by the other party, then what is the journal entry? There is no journal entry. If the arrears of preference dividend is foregone by the other party, no journal entry. We already seen, right? Okay. Next, let me continue. For each rupees 50 rupees share, 4 new 5% preference shares of 10 rupees each, plus 6 new equity shares of 2.50 each, all credit as fully paid up. We know for the 50 rupees face value of the preference share, we are paying 4 into 10. 40 rupees in the form of preference shares plus 6 into 2.5, 12.5 rupees in the form of equity share. Sir, for every 50 rupees, you are paying 52.50 per share. Sir, 52.50 per share means excess of 2.5 rupees you are paying to the preference shareholders. Now, which need to be transferred to the reconstruction account. Sir, what is the journal entry, sir? Existing preference share capital account debtor. Number of equity shares into 50. Number of preference shares into 50. That is face value and paid up value is 50. You should need to cancel. That is here just given the amount 7% preference share capital account debtor, which is 6 lakhs, to 5% preference share capital. To 5% preference share capital. We have 12,000 preference shares, right? Now 4 into 12,000, you should need to issue 48,000 preference shares. 48,000 into 10 rupees. That is 4,80,000 plus 6 new equity shares. 12,000 into 6 into 2.5. Then you will get 1,80,000. Am I right? 1,80,000 plus 4,80,000. Total you need to pay 6,60,000. Existing how much? 6 lakhs. But for 6 lakhs, you are paying 60,000 excess, right? The excess is nothing but 2.5 rupees per share. Am I right? That is 60,000. So 60,000 need to be transferred to the reconstruction account. I will explain one more time in my OneNote in detailed manner. So just while reading the problem, I'm explaining the things. Coming to point number C, lenders to the company for 1,50,000 have agreed to convert the loan into the share. And for this purpose, they will be allotted 12,000 new preference shares of rupees 10 each and 12,000 new equity shares of rupees 2.5 each. It's very easy. Loan account at our 1,50,000 to preference share capital 12,000 into 10, which is 1,20,000. To equity share capital 12,000 into 2.5, which is 25,000, right? 25 or 30, yeah. 12,000 into 2.5, which is 30,000. Now the total amount is equal to 1,50,000. 1,20,000 is preference share capital, 30,000 is the equity share capital. If you observe, huge balance is there under loan amount, which is 5,73,000. Am I right? Out of 5,73,000, now you already repaid in the form of 1,50,000. Still there is some balance under the loan account. Okay. In point number D, the directors have agreed to subscribe in cash for 40,000 new equity shares of rupees 2.50 each, in addition to any shares to be subscribed by them under A above, which are additional subscription of the equity shares, the entry bank account that are to equity share capital account. Direct entry you can pass. Of the cash received by the issue of new shares, 2 lakh is to be used to reduce the loan due by the company. If you observe here, the total loan is 5,73,000. You already paid in the form of 1,50,000 by issuing equity and preference shares. Still, how much loan is there? 5,73,000 minus 1,50,000 means still I have 4,23,000 loan balance. Now, out of such 4,23,000 is simply given that 2 lakhs we are repaying. 2 lakhs we are repaying through payment of cash. Of the cash received through payment of cash, we are reducing that loan, the entry loan account that are to cash account 2 lakhs. Still, how much balance is there under loan? 4,23,000 minus 2 lakhs means still 2,23,000 balance is there under loan account. The equity share capital cancel is to be applied. Equity share capital is cancelled means the balance of reconstruction account is to be applied to write off the debit balance in profit and loss account. Whether he was mentioned in the problem or not, it is our objective. To write off 35,000 from the value of the plant. He is also given that downward revaluation of the plant is there. Then the entry reconstruction account to plant account 35,000. Any balance remaining is to be used to write down the value of trademarks and goodwill. He told that still after writing off these two above, still if there is any balance under reconstruction account, with that balance you can reduce trademarks and goodwill. If there is no balance, no need of reduction. Okay. Show by the journal entries how the financial books are affected by the scheme and prepare the balance sheet of the company after reconstruction. The face value as reduced is to be increased to 6,50,000 for preference share capital and 7,50,000 is for equity share capital. So first let us pass the journal entries, guys. All of you please with me. So let me pass the journal entries. Roll number 4, right? Journal entries in the books of. What is the company name? Rebuilt Limited. Now all of you, let us concentrate one by one journal entry. So first related to point number A, equity shareholder agreed, reduced to each and every equity share at 2.50 per share, right? So the existing equity share capital is 7,50,000. So you can cancel the entire face value first. Equity share capital, because we should presume that there is reduction paid up value as well as face value. So equity share capital account data, which is 50 rupees. How much is the amount? 7,50,000. To equity share capital. Now the total number of shares are 15,000. Each share is converted into 2.5. Am I right? Now 15,000 into 2.5, how much? 37,500. Am I right, guys? Yeah. So each equity share is reduced to 2.5 each. We are having 15,000 equity shares, which is 15,000 into 2.5. The remaining balance you can make it transfer to reconstruction account. How much? 7,50,000 minus 37,500, which is equal to 7,12,500. Next, coming to issue related to preference shareholders, guys. One more thing, guys. They have also agreed to subscribe 3 new equity shares of rupees 2.5 each. So further subscription is also there. that is bank account data to equity share capital account. So existing 15,000, they subscribed 3 shares at the rate of 2.5 each. That is 45,000 into 2.5, we get 1,12,500. Are you with me, all of you? Next, coming to the preference shareholders issue. So anyway, we are cancelling the arrears of dividend. So just I'm writing for knowing the things. For arrears of dividend, no entry. No entry. Just for knowing the things, just I'm writing. Next, so for the preference shareholders, they're accepting 4 new 5% preference shares of 10 each plus 6 new equity shares of 2.50 each. So the existing preference share capital, if you observe, which is 7% preference share capital. 7% preference share capital account at R. So face value, how much existing? 50 rupees each. Amount how much? 6 lakhs. Now you are issuing equity shares. That is 2 equity share capital. How many number of equity shares you are going to issue? 4. So first let me write 6. Sorry, 6 new equity shares at the rate of 2.50 each. So number of preference shares are 12,000. That means for each preference shares, you are issuing 6 equity shares into 2.50 each. That is 12,000 into 6 into 2.5, which I got 1,80,000. As well as you are issuing the preference shares as well. How much percentage of preference shares you are issuing? 5%. To 5% preference share capital account. Now existing number 12,000, I'm issuing 4 into worth of preference share to be issued. How much, guys? 10 rupees. How much? 4,80,000. Now 4,80,000 plus 1,80,000 means, which is equal to 6,60,000. The excess of 60,000 is you can make it transfer to reconstruction. Here reconstruction is loss, guys, not profit. Here reconstruction is loss. Because for 6 lakhs, you are paying 6,60,000. That's why you are attaining a loss of 60,000. Okay. Next to the come to the point number C. Lenders, we are paying 1,50,000 by issuing the new preference shares. Now you can cancel the loan account. That is loan account at R. 1,50,000. You are issuing your new preference shares. That is 5% preference share capital account. Is clearly given. 12,000 new preference shares are issued. Am I right? 12,000 new preference shares of 10 each and 12,000 new equity shares of 2.5 each. Both are there. So 12,000 into 10 rupees, which is 1,20,000. So equity share capital is also there. So which is 12,000 into 2.5, which is equal to 30,000. Okay, guys. Next, coming to the next point, all of you quickly. Point number D. The directors have agreed to subscribe in cash for 40,000 new equity shares of 2.50 each. This is the further subscription. Bank account data to equity share capital account. The amount is 40,000. Am I right? How many number of equity shares they subscribe? You know, that is 40,000 divided by 2.5. Which is equal to 16,000 shares. 16,000 into 2.5. Okay. Sir, this is not amount of 40,000. Sorry, yaar. The directors have agreed to subscribe in cash 40,000 new equity shares. Not the amount. Sorry. 1 second. 40,000 into 2.5. Am I right? 40,000 shares they are going to subscribe. So 40,000 into 2.5. So which leads to 1 lakh. Which leads to 1 lakh. Okay. Next, come to the next issue, guys. Of the cash received by the issue of new shares, 2 lakh is used to reduce the loan due by the company. Again, you are paying the loan account debtor to bank account. So which is 2 lakhs. You are repaying. Okay. So next issue. The equity share capital cancelled is to be applied to write off the debit balance in profit and loss account and to write off the 35,000 from the value of the plan. So it is clearly given that you can use the balance of reconstruction account. I don't know how much balance is there. First, it clearly given that you can write off the profit and loss account debit balance and the plant as well. Plant is I can write off with 35,000. So profit and loss account debit balance, how much is there in the balance sheet? First, you can check, which is 4,51,000. Now, all of you, please cross check. First, let me how much balance is there with me under reconstruction account. Point number one, that is first entries. All of you, please start with calculator. How much balance is there under reconstruction account? I'm going to calculate 7,12,500. In point number two, nothing. Point number three, nothing. Point number four, that is fourth journal entry. I'm having minus 60,000. Point number five, nothing. Point number six, nothing. Point number seven, nothing. So I have with me 6,52,500 total. 6,52,500 total. Am I right? Out of which I reduced 4,51,000 for with profit and loss account debit balance and 35,000 for plant. Remaining I have 1,66,500. Now I can use to write off trademarks and goodwill. Am I right? That is two trademarks and goodwill account. With this, there is no balance under reconstruction account, guys. So that's why no need to transfer any single rupee to the capital reserve. This is the end of the problem. So journal entries is over. So there are no other entries. Just he is simply given that the balance of reconstruction account you can apply with debit balance of P&L as well as the reduction of plant, and the remaining balance, if anything is there, you can utilize to write off trademarks or the goodwill. That's why there is no balance under reconstruction account. No need to transfer any single rupee to capital reserve. Okay. Apart from that, he also asked to prepare the balance sheet. So preparation of balance sheet, I am giving as an HW. Please, all of you complete such homework from your end, guys. I already done the problem number 4 balance sheet, right? You can prepare the balance sheet of problem number. Sorry, I already prepared problem number 3. You can prepare the balance sheet of problem number 4. Okay. Fine, guys. Time is exactly 8 o'clock. So please, all of you take break for 10 minutes. Please, all of you assemble exactly at 8:10. We will continue the session. Welcome back, guys. Sir, some persons is telling that, can you please check entry number 2, sir? Is there any clerical issue there in entry number 2? Let me cross check. Equity shares. How many number of equity shares we are going to issue? Just a second. Oh, you are your doubt. What is your doubt? Coming to point number 2, in general entry number 2, what he is given, the equity shareholders have agreed that their 50 rupees share should be reduced to 2.50 by cancellation of 47.50 per share. Yes, I made the entry for that. Absolutely fine. Next, apart from that, they have also agreed to subscribe for 3 new equity shares. So existing equity shares are 15,000. So 15,000 into 3 into 2.5. So nothing is wrong in that, right? So I made it correctly. Someone in the chat box, some student, he is telling that's our second entry. So is it right, guys? All of you, can you please confirm? The second entry is correct only, right? Sir, they agreed to subscribe 3 new equity shares. Existing 15,000 equity shares are there. 15,000 into 3 into 2.5. Okay. Preference shareholders also, we made it correctly. Yeah, everything is fine. Right? Can I continue, guys? Person is telling 45,000 shares. Yes, it's 45,000 shares only. I also made the same thing, right? 15,000 into 3 is nothing but 45,000. What I'm asking, is it correct or wrong? Or let me cross check the answer with printed solution here. Okay. You are not giving reply. Just a second. Problem number is 4, right? 4444. Where it is? Yeah, here. Just a moment. Yeah, you can cross check right now here. So first entry is absolutely fine. Second entry is 1,12,500. So third entry is absolutely fine, guys. I mean, a third entry means here 7% preference share capital. Okay. So next one is loan entry. Fine. Next, which is related to issue of equity shares. I made it correctly. Then loan to the bank, 2 lakhs correctly. Capital reduction 6,52,500 to P&L 4,51, 35, 1,66,500. Everything is fine, guys. Absolutely. Right. We can proceed with the next problem. I already told you. So balance sheet is HW. Balance sheet. Prepare the balance sheet, all of you. You can cross check the answer with printed solution, guys. So next, let me start with problem number 5. All of you, please concentrate here. The problem is a little bit different problem. You know, after reading the problem, how it is different from the previous problems. Repair Limited is in the hands of a receiver for debenture holders. First of all, you should need to know who is the receiver for debenture holders. So we are going to see all such issues in the next chapter, actually, liquidation of companies. So in case of liquidation of companies, what will happen, you know? Before appointment of the liquidator, if at any point of time, debenture holders feels their interests are not protective. Their interest means not the interest of the debentures, not the interest on debentures. Interest means their rights, their principal amount, the interest attached to the debentures, such all things. If they feel that they are not protected, then they will appoint receiver for debenture holders. Sir, what he will do, sir? The receiver for debenture holders maybe will sell certain portion of the assets. He will realize in the form of cash, which is available to make repayment to the debenture holders. Because the company is suffering huge losses, then debenture holders may not have a trust on the company affairs, or debenture holders may not have a trust on the management. So that's why, to protect the interest of the debenture holders, debenture holders appoint one person, which is known as receiver for debenture holders. On behalf of debenture holders, he will be the receiver. Okay. Who holds a charge on all assets except uncalled capital. He is having a right to sell any asset The following statement shows the position as regards creditors as on 30th June 2015, which is not a balance sheet, guys. He is telling the following statement shows position as regards creditors. Sir, if this is not a balance sheet, given below information is not the balance sheet, then how can we know the exact balances, sir? No need of knowing the exact balances. And one more thing, from the given information, you should calculate the exact balances as well. From the given information, you should need to prepare the balance sheet as well. Yes, we can prepare. How we can prepare? Let us see by reading the further information. Property, plant and equipment, etc. cost 3,90,000, estimated at 1,50,000. In balance sheet, whether you are shown at cost price or estimates, cost price only. Sir, you don't think about the receiver for a debenture holder statement. You don't know anything. But from the given information, you can easily build the balance sheet, right? That is, property, plant and machinery, you should need to record it. Cost price 3,90,000 in the balance sheet, not at 1,50,000. Cash in hand of the receiver, cash and cash equivalent 2,70,000. Charged under debentures. Sir, what is this 4,20,000, sir? He added 1,50,000 plus 2,70,000. Then he got 4,20,000, which is irrelevant for me. In the balance sheet, we don't consider that amount. Uncalled capital is never form part of the balance sheet. Deficiency, which is irrelevant for me. Now coming here, 6,000 shares, 60 rupees each, 30 is paid up. That means the paid up capital is 6,000 into 30, 1,80,000 is relevant for me to know the paid up capital. First debentures 3 lakhs, second debentures 3 lakh. Unsecured trade payables, all are form part of balance sheet. Now, from the given information, if I build the balance sheet first let me building the balance sheet. Then after that, I will check the requirement, guys. First, let us build the balance sheet together. Problem number 5, right? So now the balance sheet as on 30th June 2015. Liabilities, amount rupees, assets, amount rupees. Not in schedule 3 format, guys, just as per the information given in the problem. So just I am building in the same manner. So this is the balance sheet format, right? So yes, now all of you concentrate, guys. Now, so the first and foremost one is share capital, which is shares are, let us assume, equity shares. So I can put like this: equity share capital. Equity share capital. How much, guys? 6,000 shares into 30 rupees paid up. 6,000 shares into 30 rupees paid up means, which is equal to 1,80,000. Am I right? 6,000 into 30. 1,80,000. Next, first debentures 3 lakhs. First debentures 3 lakhs. Second debentures 6 lakhs. Just 6 lakhs. Next, unsecured trade payables 4,50,000. Unsecured trade payable 4,50,000. That is the information from the given problem. Next, coming to the assets, all of you, property, plant and equipment first, PPE. So which is property, plant and equipment. So which is cost is 3,90,000, guys. You should record only the cost price. So estimated realizable value is irrelevant. Cash in hand. Cash in hand is how much? 2,70,000. So So remaining all are irrelevant. Sir, charged under the debentures, which is the total balance, irrelevant. Uncalled capital, irrelevant. Deficiency, irrelevant. For balance sheet, I'm talking. So deficiency means not the profit and loss account. Don't think like that. Deficiency means which have the different meaning. You don't know at this point of stage. Why? Because liquidation of companies is not yet over for you. Now coming back. Now if you can make it total of the balance sheet. So you can make it total under liability side, guys. First, what is the total under liability side? All of you. 1,80,000 plus 3 lakhs plus 6 lakhs plus 4,50,000, which is 15 lakh 30,000. Can make it total under asset side 3,90,000 plus 2,70,000. Not tallied now. What happened? The difference is profit and loss account debit balance. The difference is profit and loss account debit balance. Yes, arriving the P&L account debit balance is the special issue in this problem, which is 6,60,000. So right, which is the balance sheet as on 30th June 2015, and you can also put calculation of P&L balance. Calculation of P&L debit balance. Now the problem is ready. Now let me check the requirements. Finally, final requirements. Assuming that the scheme is duly approved by all the parties interested and by the court, give necessary journal entries. Now he is asking to pass journal entries. Now let us check one by one issue, guys. A holds the first debentures for 3 lakhs and second debentures for 3 lakhs. He is also an unsecured creditors for 90,000. A single person is holding portion of first debentures, portion of second debentures, as well as unsecured trade payable. Total, how much amount need to be payable to A? 3 lakhs plus 3 lakhs, 6 lakhs plus 90,000, 6 lakhs 90,000. For A, 3 lakhs first debentures, for 3 lakhs second debentures, for 90,000 is trade payable. Total, I need to pay 6 lakh 90,000. In the same way, he's talking about another person who is B. B, we should need to pay 3 lakhs worth of second debentures as well as unsecured trade payable for the worth of 60,000. So now total amount is 3 lakh 60,000 for B. Okay, fine. A is to cancel 2 lakh 10,000 of the total debt owing to him. It is clearly given that total debt owing to A is 6 lakhs 90,000, out of which he is ready to cancel 2 lakh 10,000. To bring 30,000 in cash and to take first debentures in cancellation of those already issued to him for rupees 5 lakh 10,000 in satisfaction of all his claims. So point number 1 is very much important. Sir, accounting treatment is not that much of difficult, but understanding of the issue is major task here. Now all of you please concentrate. Line by line I will read first. A is to cancel 2 lakh 10,000 of the total debt owing to him. To bring 30,000 in cash. He will introduce the cash, guys, here. To bring 30,000 in cash means A is ready to introduce cash worth of 30,000. If A is ready to introduce cash worth of 30,000, already how much amount need to payable to A? 6 lakhs 90,000. If he introduced the 30,000, then debt payable by the company to A will become 7 lakh 20,000. Will you agree? He is clearly given that to bring 30,000 in cash. Sir, if A brings 30,000 in cash, then the total debt payable by company to A will become 7 lakh 20,000. Now, out of this 7 lakh 20,000, A is to cancel 2 lakh 10,000. A is to cancel 2 lakh 10,000. Sir, if you cancel 2 lakh 10,000, then 7 lakh 20,000 minus 2 lakh 10,000, remaining balance will be 5 lakh 10,000. Out of this 7 lakh 20,000, 2 lakh 10,000 will goes to straight away reconstruction account. Why? Because he is ready to cancel. And what about remaining 5 lakh 10,000? And to take first debentures. Now for this 5 lakh 10,000, he is taking first debentures, which are new first debentures. We are already cancelled old first debentures. We are already cancelling the old first debentures. Now in cancellation of those already issued to him. Now these first debentures are new first debentures for 5,10,000 in satisfaction of all his claims. Now concentrate. What is the journal entry? With this point, once after reading this point, I'll pass the journal entry here. The entry is, first, you need to transfer all debts of the A to A. So out of the first debentures, the debt is related to 3 lakh. Out of the second debentures, the debt is related to 3 lakhs. Out of the trade payable, the debt is related to 90,000. So total to A account, which is 6,90,000. The total is 6,90,000. So now he is introducing 30,000 cash. Now you can write cash account debtor to A account, which is 30,000 in the form of cash. Now how much amount is payable to A total? 6,90,000 plus 30,000, which is equal to 7,20,000. Total amount payable to A is 7,20,000. Now you can cancel A account. That is, total amount is 7,20,000, out of which he is ready to forego 2,10,000. You can make it transfer to reconstruction account. To reconstruction account, which is 2,10,000. For the remaining, he is expecting new first debentures. New first debentures. How much? 5,10,000. So, and to take the first debentures in cancellation of those already issued to him for 5,10,000 in satisfaction of all his claims. In satisfaction of all his claims means for this 30,000 plus for this 6,90,000. Total for that 7,20,000. In full and final settlement, we are issuing 5,10,000. Why? Because anyway he already foregone 2,10,000. That's why the remaining balances need to be payable 5,10,000 only. Hope you understand. So passing the journal entries in case of internal reconstruction is dead easy. But understanding the given scheme itself is difficult. You need to understand the scheme properly because the journal entries are completely depending upon the provisions of the scheme. So the problem information means which is nothing but provision of the scheme. So once if you can able to understand the provisions of the scheme, so without no time you can complete the journal entries. Next, coming to point number two, B is to accept 90,000 in cash in satisfaction of all claims by him. Sir, in satisfaction of all claims means first to B, how much amount need to be payable total? 3,60,000, right? Now first let us go there. That is second debentures account debtor. Second debentures account debtor, which is 3 lakhs. And trade payable account debtor, which is 60,000. So total is 3,60,000. It should be need to be payable to B account, 3,60,000. Now it is clearly given that B is to accept 90,000 in cash in satisfaction of all his claims. B account debtor 3,60,000. How much amount of cash you paid? Cash or bank, whatever the case may be? 90,000. What about the remaining balance, sir? It should need to go to reconstruction account. He foregone na full and final settlement. We are paying 90,000. So how much? 2,50,000. Sorry. 3,60,000 minus 90,000, which is 2,70,000. Yes, am I right? Which is 2,70,000. This is the journal entry. Next, come to point number 3. In full settlement of 75% of the claim of the unsecured creditors other than A and B. Now, if you check the total unsecured creditor, that is unsecured trade payable, is 4,50,000. Consider all of you. The total unsecured trade payable is given at 4,50,000. Now, out of such unsecured trade payable other than A and B means A holds for 90,000. B holds for 60,000. 90 plus 60 means minus 90,000 minus 60,000. Then which is unsecured trade payable holded by other than A and B? Am I right? From the given information, just I'm writing the things. In full settlement of 75% of the claim of unsecured creditors other than A and B, agree to accept. Now, out of which 75% claim, what is this amount actually? 3 lakhs. 4,50,000 minus 1,50,000 means how much, guys? Which is 3 lakhs. Now, out of this 3 lakhs, he is talking about 75% claim. 75% claim means 3 lakhs into 75%. How much? Is 2,25,000. Okay. For this, what he is talking? In full settlement of 75% of the claim, unsecured creditors other than B, A and B agree to accept 4 shares of rupees 7.50 each. 4 shares of rupees 7.50 each, fully paid against their claim for each share of 60 rupees. What it means, sir? For every 60 rupees claim, they are expecting 4 shares of 7.5. That is 4 into 7.5, 30 rupees. It is clearly given that for this 2,25,000, they are expecting for every 60 rupees share, we need to pay 30 rupees in the form of equity shares. In the form of equity shares. That means for 2,25,000 claim, how much you need to pay? You need to pay 2,25,000 into 30 by 60. 2,25,000 into 30 by 60, which is equal to 1 lakh. 12,500 worth of equity share you need to be issued. Therefore, number of equity shares to be issued is equal to, so each equity share is how much, guys? 7.5. Therefore, 1,12,500 divided by 7.5, which is equal to 15,000 shares need to be issued. Okay. Sir, what about remaining 30 rupees, sir? Remaining 30 rupees foregone. So out of this 2,25,000, for each 60 rupees share, we are only issuing 30 rupees means the 60, that is the 50% portion only we are issuing equity shares. Am I right? That is the 50% portion only you are issuing this. You are issuing. What about remaining 50% portion, sir? For the remaining 50% portion, foregone. Okay, this is related to 75% claim. Sir, what about 25% claim, sir? So you need to read again the sentence very carefully. Please concentrate. In full settlement of 75% of the claim of unsecured creditors other than A and B agree to accept 4 shares of 7.50 each, fully paid against their claim for each share of 60. For 60 rupees, we are giving 30 rupees. For 60 rupees, we are giving 30 rupees. For 2,25,000 claim, how much we need to give? That is, we need to give 1,12,500. That is in the form of 15,000 shares. What about remaining 50% claims, right, sir? That is nothing but simply foregone. Okay. The balance of 25% is to be postponed and to be payable at the end of the 3 years from the date of court's approval of the scheme. Now, just they are treating it as loan, guys. Loan. That is long-term loan actually. Why? Because they are simply given that they will pay after 3 years. After 3 years means which is they are converting as a loan. Okay. Just it is continue as a loan. Next. Uncalled capital is to be called up. If you observe in our balance sheet, the existing 6,000 shares are partly paid up. The face value per each equity share is 60 rupees. Now it is clearly given that uncalled capital is to be called up in full. Now, if you make the call, what is the journal entry? Can you please tell me, all of you? At the time of making call, share final call account data 6,000 shares, 6,000 into 30 rupees, 1,80,000. to share capital account, which is also 1,80,000. Now you will get cash balance from such shares, right? Bank account data to share final call account, which is 1,80,000. Next, still problem is not yet over. Uncalled capital is to be called up in full. Now the each and every equity share is fully paid up. Now the each and every equity share face value is 60, paid up value is also 60, because earlier it is at 30 rupees, right? Earlier it is at 30 rupees. Now after making a call, the equity share is fully paid up at the rate of 60 rupees. Okay. Now uncalled capital is to be called up in full and 52.50 per share cancelled, thus making the shares of rupees 7.50 each. Out of the 60 rupees, now you are cancelling 52.50 per share. Now you need to debit the old face value, equity share capital account debtor. How much is the face value? 60 rupees. How much is the paid up capital? 3,60,000. That is 60,000 into 60 rupees to equity share capital account. So new it is clearly given that 7.50 each. That is 6,000 into 7.50 each. So which is 45,000. What is the difference? Amount sacrificed by shareholders to reconstruction account. 3,60,000 minus 45,000, which I got 3,15,000. Sir, there is no information with respect to cancellation of P&L account and all other things. Whether it is mentioned or not, you need to cancel the balance of the P&L with the balance available in reconstruction account. Please all of you cross check how much balance is there under reconstruction account. Point number 1, no balance. Point number 2, no balance. Coming to point number 3, there is journal entry number 3. Reconstruction account credit is there for 2,10,000. Okay. 4th nil, 5th plus 2,70,000. 5th. Here foregone means for this you need to pass the journal entry now. What is that? I'm not giving any journal entry. Okay, sorry. For this point number 5, I not passed the journal entry till now. Now let me pass the journal entry here. Here all of you. The journal entry is, I missed out the journal entry. Just a second. I'm passing the journal entry here. Concentrate. Unsecured trade payable account debtor. So you can cancel the remaining entire amount, which is 3 lakhs. 2, you are issuing equity shares. That is 2 equity share capital for 1,12,500. Remaining 1,12,500 foregone to reconstruction account, which is 1,12,500. 25% is claim is converted into the loan to loan account. How much 25% means? 75,000. Am I right? So this is the journal entry. I missed out. Now here, how much balance is there under reconstruction account? Tell me guys, I entirely explained the working out means this is the journal entry, right? So for the out of such 75% of I issued equity shares, remaining 50%, they simply foregone. For the 25% we converted as a loan. Now you can add to the reconstruction plus 1,12,500. Next, the 6th entry no balance, 7th entry no balance, 8th entry plus 3,15,000. So now the total balance under the reconstruction account is 9,07,500 guys. I have total balance 9,07,500. Out of which I can cancel the debit balance of the profit and loss account. Here it is there 6,60,000. You can cancel with the balance in reconstruction account. Now the next entry, 9th entry, reconstruction account debtor to profit and loss account, which is 6,60,000 is the P&L. So right here 6,60,000 I will nullify. The balance is here 9,07,500. Still some balance left over under reconstruction account, right? That balance you can make it transfer to capital reserve guys. Now So the balance transferred to capital reserve. After making knock off the P&L account balance, still if there is any balance under reconstruction account, you can make it transfer to capital reserve, which is 2,47,500. That's it, guys. This is the question number. This is question number 5. So let me check the queries quickly. Sir, anyone having any doubts? Is it debit balance of P&L is 8,70,000? Some persons are telling it is not 6,60,000. I make wrong calculation. Please check it, all of you. 15,30,000 minus 3,90,000 minus 2,70,000. Yeah, you are correct, guys. Sorry, wrongly entered 6,60,000. Okay, not an issue, which is 8,70,000. Please, all of you correct it, guys. Okay. Now, if you can knock off, just a second. So, in the flow, sometimes I will make a clerical mistakes. Please bear with me. Okay, which is the reconstruction account balance. That's correct only. The reconstruction account balance is 9,07,500 only. Just a moment. Which is 9,07,500 only. But out of which profit and loss account balance, knock off with 8,70,000, right? The remaining balance you can make it transfer to capital reserve. Right now, how much? 37,500. Okay. Can you please check, guys, all of you? Is it right? Sir, so many persons are asking that. Sir, please explain point number 3 again. Point number 3 again. Oh, what is point number 3, guys? Everyone is asking. This one, concentrate. First, line by line, you need to understand here. This is crucial point. You need to understand the scheme in very well manner. In full settlement of 75% of the claim of unsecured creditors other than A and B. First, claims related to unsecured creditors other than A and B, first you should need to fix. The total unsecured creditors is 4,50,000. Out of such 4,50,000, other than A and B means A claim is related to 90,000, B claim is related to 60,000, that is 1,50,000. That is, claims other than A and B is nothing but 4,50,000 minus 1,50,000, then which leads to 3 lakhs. So claims other than A and B is 3 lakhs. Now first, I put it such 3 lakhs. Now claims other than A and B is 3 lakhs. If you observe, first I started with such claims. Now out of such claims, he is talking about 75% of the claims. In full settlement of 75% of the claim. That's why I divided into 75% of the claim as well as 25% of the claim. So 75% of the claim means 3 lakhs into 75% is 2,25,000. 25% of the claim means 3 lakhs into 25%, which is 75,000. Okay, now for 75% of the claim, agree to accept 4 shares of 7.50 each, fully paid against their claim for each share of 60. Indirectly, he is conveying that, sir, don't think about where is the share, sir. He is giving in such a way that, sir, 60 rupees is payable amount. Then we are giving 4 equity shares of 7.50 each. Simply, you can find that for each and every 60 rupees, they are ready to pay 30 rupees. Sir, what about remaining 30 rupees portion, sir? And they are foregone. If nothing is given means in full settlement of 75% claim of 60 rupees per share, we are giving 30 rupees means remaining 30 rupees is foregone by unsecured creditors. So that's why I clearly wrote that 50% we are paying, 50% they are foregoing. Out of 2,25,000, 50% amount means 1,12,500 and foregone amount is also 1,12,500. Sir, what about remaining 25% claims, sir? And just they are converted it as a loan. That's why the entire unsecured trade payable account is debited. Equity share capital account is 1,12,500 credited, and the balance amount foregone you can make it transfer to reconstruction account, and 25% claim you can make it transfer to loan account. That is the impact of point number 3, guys. Hope you understand. Okay. Is it clarified, guys? Now? Fine. So with this point, problem number 5 is successfully completed, guys. Now all of you please concentrate, guys. Now I want to introduce the concept of share surrender without resolving the other problems. First, let me explain the only one and only the concept which I left at the time of discussing various methods of internal reconstruction is share surrender or surrender of shares. Surrender of shares. So concept is surrender of shares. Now, please all of you concentrate, guys. Approximately you can spend 10 to 15 minutes to understand this concept, literally. Sir, you know the concept of what I mean. If at any point of time, if company make a call, if the shareholder is unable to repay such amount, then company have forfeit such shares, right? First, just leave about the surrender of shares. I'm talking about forfeiture of shares. Forfeiture of shares. When forfeiture of the shares are applicable, if company make a call and if the shareholder is unable to make payment to that call, then company have a right to forfeit such shares, which is a right given to company as per the Companies Act 2013. Companies Act 2013. That's why as per Companies Act 2013, forfeiture is legalized. I mean, forfeiture is acceptable. But in case of forfeiture of the shares, you are taking back the share from the shareholder. You are taking back from the shareholder intentionally. But in case of surrender of the shares are surrendered. In case of surrender of shares, which is happen voluntarily. Here, in case of forfeiture of the shares, you are also taking back such shares from the shareholders through an obligation, which occurred through obligation. What is that obligation actually? They are not making such call. That's why you are taking back. And the forfeiture of the shares is acceptable as per the Companies Act 2013. But if any of the shares which are surrendered by the shareholders voluntarily, which is actually not acceptable, as per the Companies Act 2013. Yes. Sir, there is no provision discussing things related to surrender of shares, and which is also not valid if the company is getting shares from the shareholders when the shareholder are voluntarily submit such shares to the company, which is completely against the provisions of Companies Act 2013. But such surrender of shares can be made by the shareholders voluntarily. In case of internal reconstruction process, they can made in case of internal reconstruction process. Because if court approves for that. Sir, surrender of shares concept is right now is evolving at the best interest of all the parties. That's why if court approval is there, then a shareholder can voluntarily surrender such shares to the company. Now, the next question coming into my mind is, rather than making surrender of shares, you can cancel such shares. Why the shareholders are making surrender? Surrender means offering such shares at free of cost to the company. Just they are telling that we are ready to forego an entire amount, sir, you can take back my share. Then rather than surrendering of share, it is better to sacrifice the entire share. You can cancel such share. But the point is here, for example, if the amount sacrificed by the shareholders right now, if you want to cancel, at later point of time, if you're required to issue any further number of equity shares, then you should incur a lot of expenditure, because you need to publish the further shares, you need to entering into the listing agreement, you need to pay the listing fee to code such shares in the stock exchange. Do you understand what I'm telling? So that means why you are canceling the existing shares? Whenever there is a requirement of new shares is there, why you are paying excess amount of the listing fee to the stock exchanges? Your company is also a loss-making company. Why should you are incurring the more expenditure related to share issue expenses may incur, maybe underwriting commission may incur, maybe so many other expenditure may involve. Okay, that stamp duty you need to pay. Such all expenditure you are going to incur at the time of further issue of shares to the various parties. So to avoid all such things, it is not better to cancel such shares. It is better to take back such shares as in the form of shares only. Now, if that is the case, what is the accounting treatment we need to adopt? Is the concept is all about. Do you understand, guys? So surrender of shares is a concept of surrendering shares by the shareholders to the company voluntarily without cancellation of such a share. Sir, is it real sacrifice made by the shareholder whenever they are surrendering? Yes, whenever they are surrendering such shares, automatically, which is nothing but sacrifice made by the shareholder only. Now, what is the accounting treatment in case of surrender of shares? Let me explain here. Let us assume in equity share capital, I have total 1 lakh equity shares are there. Face value is 10 rupees. Total amount of equity share capital is 10 lakhs. This is the total amount of equity share capital and number of equity shares are 1 lakh. Now, during the process of internal reconstruction, once the court approved the entire are out of 1 lakh equity shares to that extent of 50,000 equity shares, to that extent of 50,000 equity shareholders surrendered their shares to the company. Now, company is getting all such shares from the shareholders. Now, all such shares are in the hands of company. Now, what you should need to do, definitely you should reduce such equity share capital. By passing the entry equity share capital account debtor, which is 5 lakhs, number of shares are 50,000. Now, all such shares are, you can put it under one temporary account, which is to share surrender account. Now, share surrender account represents the number of shares for which the capital is there under company hands. The number of shares for which, the total number of shares are in the hands of the company after making surrender by the shareholders is representation of the share surrender account. You understand? Now, the shares which are presented under share surrender, you can utilize at the time of making repayment to various parties. I mean to say, now with the balance of share surrender, you can make it payment to creditors. You can make it payment to debenture holders. You can make it payment to preference shareholders, for any party. Now, no need of printing the additional shares, no need of incurring the additional cost, listing cost. You can directly given the shares which surrendered by the shareholders to the respective parties during the process of internal reconstruction. That is the base objective. Now, the next question is, sir, then at the time of issuing the shares which are under share surrender to such various parties, what is the journal entry, sir? Now, let me continue the illustration. So the illustration, just I'm continuing. Let us assume balance of creditors is 3 lakhs. So balance of creditors is 3 lakhs. Now the issue is, out of such 3 lakhs, 2 lakhs amount out of such 3 lakhs, or I will put like this, out of such 3 lakhs, 1 lakh amount is foregone by the creditors. For the remaining 2 lakhs, balance of 2 lakh, they are expecting equity shares. The company issued such equity shares out of share surrender. The company issued the equity shares out of share surrender. Now consider it, guys, all of you. Sir, one thing is sure, if the party is foregone means there is the normal entry. The normal entry is creditors account debtor to reconstruction account. That is the normal entry. 1 lakh, 1 lakh. Nowhere relevant to the share surrender, that portion. Now coming here, balance of 2 lakhs, we are issuing equity shares through utilization of share surrender. Whenever you are using the share surrender account, the entry should be need to reversed. The earlier entry is equity share capital to share surrender. Now you are utilizing the share surrender account. Now the first and foremost entry is share surrender account debtor to equity share capital account. That is out of 5 lakhs, how much you are using? Only 2 lakhs. Now consider it, guys, all of you. Sir, at the time of making share surrender, actually you are getting profit. Tell me, guys, when the shareholder surrendered such shares, you are getting the profit. But do you recognize that profit till now? You are not recognized. Please, all of you, let me concentrate. Whenever the shares are surrendered by shareholder to the company is getting the profit during the process of internal reconstruction, but company didn't recognize such a profit because those are in the form of shares. But till now, company was not cancelled such shares. Am I right? Whenever it is utilizing the share surrender, then it will pass the entry share surrender account debtor to equity share capital account. But at the time of making surrender of such shares by the shareholder to the company, it will not recognize any profit. It will recognize such profit right now. It will recognize such profit means for utilization of share surrender, I am getting a profit of 2 lakhs. Now the creditors account balance is also got reduced, which is creditors account 2 lakhs. Sir, now what happened, sir? I can't understand really. Just you passed the entries like that. We can't understand anything. Now, hope you all of you understand this portion. There is no confusion related to this one. You know already about this portion, right? Now, for the purpose of making payment of the balance 2 lakhs, first I am utilizing the share surrender account. Whenever you are utilizing the share surrender, the entry is share surrender account debtor to equity share capital account. Now the creditors balance also decreased to the extent of 2 lakhs. That is creditors account debtor to reconstruction account you passed. First, let me please all of you concentrate. For example, if there are no share surrender account, let us assume there is no share surrender account, then what is the entry you will pass? The entry is creditors account debtor. Just like that, you are issuing the equity shares to the creditors. So creditors account debtor 2 lakhs to equity share capital account 2 lakhs. If at all there is no share surrender account. Now all of you concentrate. Just you can treat that share surrender is the reconstruction account. Just for the time being, just I am telling that share surrender account, you can assume it as a reconstruction account, because whenever the shares are surrendered by the shareholders to the company, which is profit to the company, equity share capital account debtor to share surrender account means equity share capital account debtor to reconstruction account only. Now, if the share surrender resembles the reconstruction account, now the reconstruction debit, reconstruction credit, the net impact is creditors account debtor to equity share capital account only. The net impact is creditors account debtor to equity share capital account only. But you cannot pass directly this entry because already their balance under share surrender account. First, you should utilize such share surrender account debtor to equity share capital account and creditors account debtor to reconstruction account. Now, if you check the net impact is creditors to equity share capital account only, because the share surrender account resembles the balance of profit only, which is reconstruction account only. But don't do like that. Just for understanding purpose, I told you. Sir, then what is the thought process we should need to adopt? Whenever you are utilizing the share surrender for the purpose of making to any party, first, for the purpose of utilization of share surrender, the entry should be reversed. Share surrender account to equity share capital account. Now you are issuing the shares to that respective party as well. You should need to debit such party. Now, till now, you are recognizing the profit, because whenever the shares are surrendered by the equity shareholders to the company, means company is enjoying the profit in the process of internal reconstruction. Now such profit you can recognize in the form of reconstruction. Sir, we can recognize here itself. Why we are not recognizing at the time of surrender? At the time of surrender, the shares are in the at the time of surrender, the amount is in the form of shares. The amount is in the form of shares. Otherwise, if I cancel such shares, I would like to transfer to reconstruction at that point of time itself. But right now, I'm utilizing such share surrender, means right now the shares are gone from the company. Now I can treat it as a profit of the company. That means whenever you are utilizing the share surrender, the journal entry is same share surrender to equity share capital in all cases. But at the time of issuing such share surrender to the creditors, now you need to nullify the creditors account, and that amount you need to make it transfer to reconstruction account. If reconstruction share surrender cancel with each other, then the net entry is creditors to equity share capital account only. Do you agree, all of you? Next, let me take one more case, guys. No worries. Let me take one more case. I don't want to take any further problems. So first, let me explain the issue here. Okay. The next issue, I mean to say, after completion of concept only, I will go to the further problems. Please concentrate. Issue number 2. Creditors amount is, let us assume the creditors amount is again 3 lakhs. Again 3 lakhs. So this is issue number 1. This is issue number 2. Creditors balance is 3 lakhs. Now, out of such creditors of 3 lakhs, 1 lakh is ready to foregone. 1 lakh, or I can put it as 2 lakhs, not an issue. Okay. 2 lakhs is ready to foregone. So the existing creditors balance out of 3 lakhs, 2 lakhs is ready to foregone. In consideration of that sacrifice, in consideration, not for the remaining guys, in consideration, they are expecting 1 lakh worth of equity shares. Now, our company issued such 1 lakh worth of equity shares out of share surrender. Am I right? Please concentrate. Still, there is a balance of, we only settled 2 lakhs, right? Still, there is a balance of 1 lakh, right? For the balance of 1 lakh, also we are issuing equity shares out of share surrender. Okay. Now concentrate one by one. So the total amount is 3 lakhs, right? You told the total amount is 3 lakhs. Okay. Out of that, he is foregoing 2 lakhs. But anyway, he is expecting 1 lakh. Sir, gross sacrifice is 2 lakhs. But again, he is expecting immediately 1 lakh, means the net sacrifice is only 1 lakh. Do you agree? Net sacrifice made by the creditors is only 1 lakh. That's it. I too agree. Out of such 3 lakhs, if gross sacrifice is 2 lakhs, for the remaining 1 lakh balance is expecting equity shares which are out of share surrender. For this, how to deal, we already know. in the same to same above case, into same to same, the balance of 2 lakhs, we are issuing equity shares. Here, balance of 1 lakh, we are issuing the equity shares. We know how to deal this situation. Now, one by one. Sir, in consideration of that foregoing, we are issuing 1 lakh worth of equity shares out of share surrender. First, whenever you are utilizing the share surrender, for which purpose you are utilizing the share surrender, I don't mind. Whenever you are utilizing the share surrender, the entry is share surrender account debtor. Tell me guys, all of you, share surrender account debtor to equity share capital account. So total, you are issuing 2 lakh shares, out of which 1 lakh shares you are issuing in consideration of the foregoing. The another 1 lakh is issuing for the remaining balance of the creditors. Whatever the case may be, total you are issuing 2 lakhs worth of equity shares. That is 2 lakhs, 2 lakhs over. Now you can cancel the creditors account. You can cancel creditors account. How much amount is the creditors account total? 3 lakhs. Consider all of you. Creditors account is total 3 lakhs. Now out of this 3 lakhs, 1 lakh is the real foregoing. Net sacrifice how much? 1 lakh. Whether share surrender account exists or not, to the extent of the balance under net sacrifice, I should need to make it transfer to reconstruction account. Reconstruction account, which is real sacrifice. The amount really sacrificed by the creditors, I should need to make it transfer to reconstruction account. Plus, just a second, how much amount you utilized to share surrender? Here 1 lakh, here 1 lakh, here 1 lakh. To that extent, you need to present to the reconstruction, right? Tell me guys, in the above example, how much amount you utilized to share surrender? 2 lakhs. For that 2 lakh, you transfer to reconstruction account or not? In the same way, here also, you utilized 1 lakh as well as 1 lakh, total 2 lakh shares. For that purpose also, you should need to make it transfer to reconstruction account. Here 1 lakh is the real sacrifice. For this 2 lakhs is for utilization of share surrender. So the total amount is 3 lakhs. But total amount you should need to transfer to reconstruction only. But 1 lakhs is related to pure sacrifice. Remaining 2 lakhs is related to issue of shares to the creditors through utilization of share surrender account. Do you understand, all of you? Please let me know, guys. Let me quickly check in the query box. No one is giving reply here. The concept is very much important and quite confusing as well. So please, if you get clarified the things, it is very easy. Yes, agreed. Yes, agreed. Okay, fine. Now, let me summarize the things. All of you, please concentrate. Sir, whenever the shareholders voluntarily decides to make surrender of their shares, then the company should immediately pass one entry by debiting the equity share capital and crediting the share surrender account. That is equity share capital account to share surrender account. If you pass this entry means till now you are not recognizing any profit. Actually, due to surrender of shares, profit is exist. Due to surrender of shares, profit exists, but company is not recognizing such profit. But company, when it is going to recognize the profit, whenever they will utilize such share surrender at the time of issue to the various parties, then it will recognize the profit. That is the discussion. If you understand such point, then everything is very simple. Okay. Now, at the time of making payment to creditors or the debentures or the preference shareholders, at the time of making payment to such parties through issue of equity shares, through utilization of balance sheet share surrender, what are the entries need to be passed? The entries are whenever you utilize the share surrender, the entry is same, share surrender account to equity share capital account. Now, to the extent of the amount of the share surrender you utilize, you should need to transfer to reconstruction by debiting that party. That is, if it is creditor account, if it is debentures account, if it is loan account, to reconstruction account. That is the two entries you need to pass. The net impact is share surrender reconstruction is cancelled to each other. Then the net impact is liability account to equity share capital only. We've seen such thing as well. Now, in case number 2, whenever you are issuing equity shares out of share surrender as a result of in consideration of foregone made by the creditors, whether the equity shares you are issuing as a result of foregone made by the creditors You are issuing equity shares for the balance of the creditors. There is no difference in case of share surrender. Whenever you are utilizing the share surrender, the entry is same: share surrender to equity share capital. And to the extent of the amount of the share surrender, you are utilized to reconstruction. Now 2 lakhs simply you transferred for which purpose? For the purpose of utilization of share surrender. So then what about this 1 lakh, sir? That 1 lakh I transferred to the reconstruction, not for the utilization of share surrender, due to real sacrifice made by the creditors. Out of the 2 lakhs gross sacrifice, 1 lakh we are paying equity shares, means the real sacrifice is only 1 lakh, or the net sacrifice is only 1 lakh. For that purpose, I transfer to the reconstruction. That is common. Whether share surrender exists or not, the real sacrifice made by the creditors, I need to make it transfer to reconstruction account only. So the total amount of the reconstruction is, for utilization of share surrender 2 lakhs and the real sacrifice 1 lakh, total 3 lakhs. So with this background, let me take up one problem. Then still, if any doubts are there, all such doubts are clarified. Then before proceeding with that problem, I will explain one more issue. Sir, after utilization of share surrender, let us assume after utilization of share surrender, still if any balance is there under share surrender account, what can I need to do? Maybe here 5 lakhs is there, right? In 5 lakhs, in issue 1, I utilized only 2 lakhs. In issue 2 also, I only utilized 2 lakhs. Still there is balance of 3 lakhs under share surrender account, right? The balance in share surrender account, need to transfer to reconstruction account. Sir, we are unable to utilize the share surrender, means now at least you need to recognize profit. Sir, at the time of issuing shares out of share surrender to various parties, you are recognizing the profit. Now on the unutilized balance of share surrender, whenever the shares are surrendered by the equity shareholders, means which is nothing but profit only, such profit you should need to transfer to reconstruction account. After transferring to reconstruction, what you will do, you will make it set off the reconstruction account balance with the reconstruction balance is you can utilize to set off debit balance of P&L. If still any balance under the reconstruction account, what you should need to do? Balance of reconstruction transfer to capital reserve. That is the flow. First, you should find the balance of share surrender. It should be transferred to reconstruction. Then it should be knock off with P&L account debit balance. Still, if there is any balance under reconstruction, it should be transferred to capital reserve. Okay. So with this background, let us see one problem, guys. The problem is problem number 1 second. I'll open the problem. Yeah, the problem is problem number 8. All of you please come to problem number 8, guys. So I skipped certain problems in between. So I directly jump to problem number 18. Please all of you open problem number 8 for the discussion. Can I start, guys? So please all of you concentrate. We have still 15 minutes left. We can easily complete the problem. The summarized balance sheet of Revise Limited. The summarized balance sheet of Revise Limited as at 31st March 2011 was as follows. Coming to assets, fixed assets, machinery is given, current assets, inventory, trade receivables, bank balance, which is profit and loss account, debit balance. Coming to liabilities, equity share capital is there. In case of unsecured loans, 12% debentures is there. Accrued interest is also given. In case of current liabilities, trade payables is there. Provision for income tax exists. It was decided to reconstruct the company, for which necessary resolution was passed and sanctions were obtained from the appropriate authorities. Appropriate authority means NCLT. Accordingly, it was decided that each share is subdivided into 10 fully paid up equity shares of rupees 10 each. You know the journal entry at the time of subdivision. Equity share capital account at our old face value to equity share capital account new face value. There is no change in the paid up capital. If you observe, the number of equity shares are at the rate of 100 rupees each. If each share is subdivided into 10, then 10,000 into 10, it will become 1 lakh equity share. 1 lakh into 10 rupees, it will become 10 lakhs. So equity share capital account at our 100 face value, amount 10 lakh to equity share capital 10 rupees face value, amount 10 lakh. That is the entry. Next, after subdivision, each shareholder shall surrender to the company 50% of its holding. Total right now 1 lakh equity shares are there. 1 lakh into 50% means 50,000 equity shareholders surrendered their holding for the purpose of reissue to the debenture holders and trade payables whenever necessary. You know, at the time of shares surrendered by the shareholders to the company, the journal entry is equity share capital account at R, equity share capital account at R to share surrender account. To share surrender account. How much? 50,000 into 10 rupees means 5 lakh, 5 lakh. Out of the shares surrendered, so out of the shares surrendered, total 50,000 shares, 50,000 into 10, which is 5 lakh. Out of the share surrender of 50,000 shares, 10,000 shares of rupees 10 each shall be converted into 12% preference shares of rupees 10 each fully paid up. Oh my God, he's telling that out of these entire 50,000 shares are equity shares, na? Equity shares are surrendered. Out of this 50,000 shares, we are converting 10,000 shares are preference shares. Remaining 40,000 shares are still continue as a equity shares. Sir, then for the purpose of conversion of equity shares into preference shares, what is the journal entry, sir? No need to write any entry. No need to write any entry. I will tell you why no need to write any entry, sir. For example, if you want to convert equity share under share surrender into the preference share, what entries you need to pass exactly? First, you need to cancel share surrender to the extent of 10,000 shares. Share surrender account at R. 10,000 into 10, 1 lakh to equity share capital, 1 lakh. First, now these are equity shares. Now these equity shares you need to convert into the preference shares. The entry, equity share capital to preference share capital. Now these preference shares should need to be surrendered. Preference shares account at R to surrender of shares account. Now if you observe here, equity share capital cancel. Preference share capital cancel. Share surrender account cancel. The impact is nil. That's why no need to pass any journal entry. You can assume that out of such 50,000 shares, 10,000 shares are converted into the preference shares. Remaining 40,000 shares are in the form of equity shares. Sir, I don't mind whether the share surrender contains equity shares or preference shares. The system is same. The entries are same. Okay. But for conversion of equity shares into preference shares under share surrender account, you no need to pass any further entry. If you want to try to pass such entry, first you need to cancel the share surrender. At the time of cancellation of share surrender to equity share capital. Now you can convert such equity share capital into preference share capital by passing the entry equity shares to preference shares. After that, the balance of preference shares, you can make it surrender. That is preference shares account to share surrender account. Then all entries are nullifying with each other. That's why you can simply assume that out of the share surrender of 50,000 shares, 10,000 shares are converted as a preference shares and 40,000 shares are continue as equity shares. Okay. Now what is the story? Let me explain further. Are you with me, all of you? The claims of the debenture holders shall be reduced by 75%. Now coming to the claims of debenture holders, 2 lakhs plus 24,000, which is 2,24,000. Out of such 2,24,000, 75% is reduced. 1,68,000 will go to the reconstruction straight away. Will go to the reconstruction, is telling. The claims of the debenture holders shall be reduced by 75%. In consideration of the reduction. Oh my God, this is not a gross sacrifice. This is not a real sacrifice, guys. This is telling which is a gross sacrifice. Why? Because as a result of foregonement of this 1,68,000, in consideration of such reduction, debenture holders expect the debenture holders shall receive preference shares of 1 lakh which are converted out of shares surrendered. I mean to say, out of this 1,68,000, they're expecting 1 lakh. That's why the real sacrifice is only 68,000. The real sacrifice is only 68,000. You know one thing, whenever real sacrifice is made, it should straight away goes to the reconstruction. Now, what about remaining 1 lakh? For remaining 1 lakh, you are utilizing the share surrender. Entry, share surrender to preference share capital and debenture holders account data to reconstruction account for this 1 lakh. For this 1 lakh. Why you are utilizing the 1 lakh for the purpose of share surrender, then share surrender to preference share capital, you should cancel the debenture holders to that extent, that is debenture holders account data to reconstruction account. And the real sacrifice, how much? 68,000. For that real sacrifice, debenture holders account data to reconstruction account 68,000. I will explain one more time through my OneNote. So let us take the discussion right now itself. Whenever I am reading the point, I will put it in my OneNote. Just give a moment. The problem is problem number 8, right? So please all of you concentrate, which is problem number 8. So first, all the equity shares are subdivided into 10 rupees, right? At the time of subdivision, the entry is equity share capital account data. So face value 100 is gone. So the amount is 10 lakhs. To equity share capital, 10 rupees face value. The amount is 10 lakhs. Now total we have 1 lakh equity shares with us. Now it is clearly given that out of such 1 lakh equity shares, 50,000 equity shares are surrendered by the shareholders. Then the journal entry is equity share capital account data. Equity share capital account data. Out of 1 lakh equity share, you can make it surrender 50%, that is 5 lakhs to share surrender account. To share surrender account, which is 5 lakhs. Am I right? Are you with me, all of you? Now he told that out of this 50,000 shares surrendered, 10,000 they are converted into preference shares. Remaining 40,000 just they are continue as equity shares. For that conversion of preference shares, no need to pass any entry. The next issue he is given that, sir, claims of the debenture holders. Claims of debenture holders. Now, claims of the debenture holders, what he will talk, the claims of the debenture holders shall be reduced by 75%. First, let me calculate the total claims of the debenture holders. In the form of principal, they are having 2 lakhs. In the form of accrued interest, they are having 24,000. That is total 2 lakhs plus 24,000. That is 2,24,000. Out of which he is talking first about 75%. 75%. 75% is foregone, which is not a real sacrifice, guys, which is gross sacrifice. Because as a result, he is expecting that, as in consideration, he is telling, in consideration, he is expecting 1 lakh worth of equity shares. Sorry, 1 lakh worth of preference shares. 1 lakh worth, not 1 lakh preference shares, 1 lakh worth of preference shares out of share surrendered. Out of share surrendered. Now, therefore, net sacrifice. First, let me calculate net sacrifice. So 2,24,000 into 75%. How much? Which is first 2,24,000 into 75%. Minus 1 lakh. So because they are expecting the 1 lakh, right? So 2,24,000 into 75%, which I got 1,68,000. 1,68,000 minus 1 lakh, 68,000. So the net sacrifice is 68,000. You know the entry for net sacrifice, which is debenture holders account data to reconstruction account 68,000. Whether share surrender account exists or not exist, I don't mind. Whenever real sacrifice is made, the journal entry is party account data to reconstruction account. Now come here, come to this case. Whenever you are utilizing the share surrender, you should need to pass two entries. First entry is share surrender account debtor to equity. Now here preference to preference share capital. How much? 1 lakh. To that extent, you need to debit the debenture holders account, right? Debenture holders account debtor 1 lakh to reconstruction account also 1 lakh. Now for the real sacrifice, the entry is debenture holders account debtor to reconstruction account. You can do one thing, here also the entry same, here also the entry same. You can club the total amount as well. Debenture holders account debtor to reconstruction account, you can make it total 1,68,000 as well. Now, no need to pass two entries. Debenture holders account debtor 1,68,000. Out of that, 68,000 is the real sacrifice. Remaining 1 lakh is due to utilization of share surrender. So the total amount is 1,68,000. Also, you can put it like this. Do you understand, guys? Is it okay to all of you? So next, let me continue the further issue. Sir, what about remaining 25%? So if nothing is given means, what about remaining 25%, sir? The remaining 25% is still carry forward in the balance sheet. That is still carry forward as a liability. So the remaining 25% is still continue as a liability. Okay. Next, coming to point number 5. Trade payables claim shall be reduced to 50%. It is to be settled by the issue of equity shares of rupees 10 each out of share surrender. Now, trade payables 72,000 is there. Now let me go to the trade payables. In my OneNote, I'll explain. This is point number 4. Trade payables total balance is given 72,000. It is clearly given that out of this 72,000, sacrifice is there for 50%. First, let me check, is it sacrifice is gross sacrifice or net sacrifice? Trade payable claim shall be reduced to 50%. He is not given in consideration of this. He is given that it is to be settled by. It is to be settled by means for the remaining portion. That means the sacrifice is the net sacrifice. He is talking about the remaining 50% portion. Remaining, just a second. He is talking about the remaining 50% portion. So the remaining 50% is we are going to issue shares. That is equity shares out of share surrender. Now all of you, out of this 72,000, real sacrifice is 50% means 36,000. It should be anyway go to the reconstruction. Now we are issuing the equity shares, right? Two entries. One is share surrender to equity share capital. Another one is trade payable to reconstruction account. Now consider all of you, share surrender account debtor. Share surrender account debtor 36,000 to equity share capital account 36,000. Then trade payable account debtor to reconstruction account. For the real sacrifice 36,000, you should also need to transfer to reconstruction, which is the real sacrifice. And another 36,000 for utilization of share surrender. So total 72. No need to pass again two entries here. If you want to pass, you can pass here trade payable to reconstruction, again trade payable to reconstruction. Both the entries are same as like this. That's why I passed a single entry trade payable account to reconstruction account, which is 72,000. Hope you understand, guys. Let me read further. Balance of profit and loss account to be written off. The shares surrendered and not reissued shall be cancelled. Now, if you can cross check how much balance is there under share surrender account, in opening 5 lakhs is there. Out of such 5 lakhs, I already utilized 1 lakh. Still 4 lakhs is there. Out of such 4 lakhs, now I utilized 36,000. Now 4 lakhs minus 36,000. 4 lakh minus 36,000. I have 3,64,000. Now the balance in share surrender account, which is 3,64,000, you can make it transfer to reconstruction account. can make it transfer to reconstruction account, which is 3,64,000. Now, all of you can calculate the balance of reconstruction account. All of you, can you please calculate? Sir, in first entry, there is no reconstruction account. Second entry, there is no reconstruction. In third entry, reconstruction balance is there for 1,68,000. All of you in your calculator, you can start 1,68,000 plus. In fourth entry, the balance under reconstruction account is 72,000 plus 72,000. Next, this entry is entry number 5. In fifth entry, the balance transferred to the reconstruction is 3,64,000 plus 3,64,000. So total, I have 6,04,000 under reconstruction account, guys. So reconstruction account data, total I have 6,04,000. Now, out of which first you need to cancel the debit balance of profit and loss account. P&L account debit balance is there for 6 lakhs, guys. To profit and loss account, which is there for 6 lakhs. Okay. Any other thing is given here? Nothing is given. That's why the remaining balance I can make it transfer to capital reserve, which is 4,000. So like this, you need to pass the journal entries. After writing of the profit and loss account, any balance is there, you should need to transfer to capital reserve. One point is important point, guys, in case of surrender of shares. Whenever you are utilizing the share surrender, the entry is same. Share surrender to equity share capital. Now, to that extent of the amount utilization of share surrender, you need to make it transfer to the reconstruction account by debiting such party account. And apart from this, if at any point of time real sacrifice is there, to that extent sacrifice also you should need to transfer to reconstruction. That is not as per share surrender account. Whenever a party sacrifices something, we should need to make it transfer to reconstruction account only. So that's why that situation is included along with the situation of share surrender. Both you can club it, you can put it under the reconstruction account. If you remember such point, then a share surrender concept is very much easy, guys. So that's it. With this concept, I completed share surrender, guys. Still, if you have any issues, I will clarify such issues in the next class. Maybe probably in the next class, we will discuss some more issues related to the internal reconstruction. If time permits for me, I will take 1 or 2 more problems for the purpose of discussion. Remaining problems, I will give it as HW. Then I will start a new chapter, liquidation of companies. So just I am telling you, in the next lecture also, we are continuing the chapter internal reconstruction only. But definitely we will start in the next lecture, liquidation of companies also. Bye-bye, guys. Have a nice day.
Recording stopped.